today. Obviously, Rob is a legend. Worked closely with him on the recent deal that we closed on in Houston, Texas. Is a living legend. He's only 22 years old. I've been waiting for this interview. Hey, Rob.
Thanks. I wasn't expecting that introduction, but thank you very much.
No, seriously. Obviously, I know so much about you. We've met. Obviously, we do business together with Kent as well. But I think our Dwell listeners want to hear straight from the horse's mouth. Can you tell us a little bit more about yourself? Kind of what got you to this point, and kind of what you're up to right now.
Absolutely. So, as you mentioned, Kent and I are co-founders of Lone Star Capital Group, which is a New York-based real estate investing firm focused on Texas, as you can tell from the name. So specifically, we're looking to buy underperforming multifamily in Houston with a value-add component, usually from improving management, renovations, and also unlocking value through the capital structure. So that's in a nutshell what we're focused on right now. And yeah, happy to talk more.
Absolutely. So let's you're 22 years old. Let's kind of jump right into that. Let's not shy away from that.
Yeah.
And obviously I know you, pretty well. You're amazing in terms of like debt, multifamily, this stuff. I mean, you make me feel like, wow, like, this stuff really well. So there are people out there, maybe they're even in their 40s or 30s or, a little bit older, and they're still trying to learn, just trying to start their journey in real estate, but you've done pretty well. I mean, having almost 40 million, AUM, assets under management, it's pretty amazing, for your age, regardless. I don't want to keep going to that, but it's pretty amazing.
Right.
So can you kind of give us, how did you get started? I know your dad obviously, does real estate in California, but how did you get started in this journey? And, towards the end of that, can you kind of tell us what your experience has been, being that you're, somewhat a young person in a somewhat big boys club? How has that worked out for you?
Yeah. So, definitely didn't do it alone. I had a lot of help, but it started, it really started obviously back just growing up and being in a real estate family and watching my dad run his projects, whether that be development or, single family flips and managing his brokerage business. But in my adult life, when I was still in college, I started just doing all my own research and reading up on bigger pockets like everyone does when they get started. Obviously was really inspired by Rich Dad Poor Dad growing up. And so getting involved in and reading and consuming all that content and just keeping my intellectual curiosity going led me, started me down this path. And then I pretty much started bugging my dad and saying, hey, we need to really look into this multifamily thing. This is doable. For him, he's set in his ways, and he's figured out what's worked for him, and he just does this single family game. And for me, I was young and didn't know any better, so I just said, hey, no, we can buy $10 million deals, we can buy $20 million deals, let's go do this. And so from that, him and I started researching together. We started getting involved in the communities, and really that's what accelerated my growth so much, is getting involved and meeting so many people and learning from them, and being around other people who were doing exactly what I wanted to be doing, which just made it so much more real.
Yeah, I like that. And you mentioned a lot of really good things. Intellectual curiosity, just kind of staying curious will just help us continue to, learn new things, right? Even though you guys were already kind of in the real estate investing sphere, your dad was doing single family. So it's totally different beast, as you know, to multifamily. So you didn't think that, we're already doing real estate, single family flips, I don't need to do anything else. I don't need to look at anything else. So just having that curious mind also helps with the learning process. So I'm glad that you brought that up. So you were going on the forums, you read all the amazing books, Rich Dad Poor Dad. How much of mindset has played a vital role in your journey?
Mindset, I think, is huge for me especially, but just for everyone in general. And my mindset really started, I don't know, some of it was taught, some of it was just I was born with, because I remember ever since, my first days at school, we would get the homework packet for the week on Monday, and it was done on Monday. That was just the way I was, and that's how I like to approach and attack things. And so I was always a good student, but then where I really sharpened my mindset and developed that skill of perseverance and hard work was through football, actually. So growing up, I played football since I was 10 and then all through high school. And, it doesn't really matter what you're doing, but if you commit your life to something, you're going to learn a lot, and you're going to learn a lot about yourself, and you're going to really grow as a person. And I think that's exactly what happened for me. And I really appreciate that experience to be able to have those adversities and overcome them, and have those lessons that can apply to all aspects of life. And hopefully they, specifically apply to running and growing this business.
Absolutely. You mentioned a few things as well. You didn't do this by yourself. Obviously, multifamily is just by its nature a team sport. Like unless you're like a Saudi prince, like I always say, and you have like a gazillion dollars, you would need people. Even with that, you still need attorneys. You need
Still a
people.
team.
Yeah, so you definitely need a team, right? And you obviously you have that. We've worked together. So I want to really touch on something. There's a Dwell listener listening on this conversation. They're thinking, "Wow, oh my goodness, this guy is 22 years old and is doing this." And I've been telling myself, I'm too young, I can't get started, I don't know how to start, or I'm too old, right? Or I don't have enough money, or whatever it is, fill the blank. What would you say to that person?
Well, I'd say, the right time to get started is always now. And that doesn't mean all of a sudden you're going to be fulfilling your dream right away and doing a whole deal all on your own. And, you're the king of the hill, or you get even the biggest piece of the GP pie, right? We talk about splitting up GP responsibilities and how much compensation you get. If you're thinking about doing your first deal, just right there commit or understand that you're going to be receiving probably the smallest percentage of the GP right there, even though it's your deal. That's just the way it is. That's really frustrating to see on your first deal or first couple deals, but it's really buying into that bigger picture that, hey, you're building something bigger than just what's happening right now. And whatever you're missing, there's always that counter piece available to you, and you just have to go and ask for it and get it. And I think one interesting thing about multifamily being a team sport, and I think it aligns with my personality well, is I've never been afraid to ask. And so many people are afraid to get rejected or to ask for something, worried about rejection. And so for me, I've always just been willing to be, number one, intellectually curious, and two, ask. So if I don't know something, I ask. If I need something, I ask, right? So when we were first getting started, I would always like to pick my attorney's brain. I mean, he's been doing these transactions for so many years, right? He of course has so much to offer to me, so I'd be a fool not to try to get some of that value. So I'm not trying to necessarily be a value leech everywhere I go and just get everything for myself, but it's just a journey of leaning on others in a, I guess, mutually beneficial way.
Yeah, I think one of my favorite quotes is from Socrates, which is, wisdom is knowing that you know nothing, right? I think that, and that's clearly what you're doing, right? And when you say that to yourself, you understand that you're definitely not being a value leech. It's just that you know that the world is so big. Even Google, I'm sure, doesn't know everything, right? They're still constantly data mining Google. So, I think just having that humility to know that you can always lean, like you said, on your attorney, or somebody that has been doing this for so long, is actually the beginning of intellectual curiosity. That's exactly what it is. So I love that you mentioned that. I want to quickly go back to one thing you said as well. When you get your homework on Monday, you get it done on Monday. And you also played football from 10 years old. So I can see that some of those disciplines have actually been, transferred to some of the things that you've done, and it's probably helped you get started. So talking about getting started in multifamily, can you tell us about the first deal? How did you find the deal? How did you fund the deal? You can talk about the fundraising part for it. What were the challenges in that deal? I know there's a lot of questions in there, so we can always,
Sure.
go on a deep dive.
Yeah, and before I dive into that, I'll just go back to, you gave a quote, so I'll throw in a quote, and I'll say, when you start out, you're humble, and you don't assume you know it all, which is, that's one of the dangers of becoming successful, is you think you know it all, and then now you become blind to risk, and you become blind to pitfalls. And so one of my favorite Mark Twain quotes is, it's not what you know what gets you hurt, it's what you think you know that just ain't so, or something like that. So it's always good to make sure you know, don't be so sure of yourself. But anyway, so diving into the first deal, um, prior to that, my dad and I had started hunting for deals in Silicon Valley, right? And so I was underwriting deal after deal, and I just kept telling him, these deals don't make any sense. We can't really get these to cash flow. The debt is going to come in with a haircut on the leverage just because it doesn't support the debt service coverage ratio. And he said, well, we have to find a deal in Silicon Valley because that's where my clients are, and that's where we're gonna, they're only gonna be comfortable investing their money here. And I said, no, we have to go out of state. We have to go to where the opportunity is. Give your clients in Silicon Valley in California the opportunity to invest with us out of state. So after looking at 100 deals in Northern California, he said, well, maybe LA is better. So look at another 100 deals in LA, and the same problem. So finally we started looking, seems like where everyone else is looking, Texas, but nonetheless, there's still a great opportunity there. And we're looking at a number of markets, and finally, an off-market deal came to us through the process of searching for a different portfolio that was on the market. So it was just through the process of being in the market and getting to know different brokers along the path of trying to pursue a deal that we weren't expecting to find came to us. And that was how we were able to actually find our first deal and put it under contract. So that's obviously the easy part, right? Putting something under contract. And then the hard stuff begins, which obviously raising money is what a lot of people talk about as being very difficult and the whole focus of the transaction. But really, aside from raising the money, there's so much that goes into closing a deal. It's so complicated, and there's so many moving parts, especially when you get a sophisticated bridge loan involved. There might be a rate cap that you need to go and arrange, and there's just hundreds of pages of loan agreements. So really, aside from us trying to learn for the first time to go through the transaction process just from a due diligence and transaction paperwork process, there was also obviously the big 800-pound gorilla of raising $4.5 million. So that experience was a great learning experience because with your back against the wall and you have the time is against you, you just really you're very, very humbled, and you just figure that, hey, I need to talk to everyone I know, and you never know who's going to help you along this path. But I call it dialing for dollars, but it's really just reaching out and contacting everyone in my network, expanding my network, asking for introductions, asking for referrals, and bringing partners on to help fulfill that capital raise.
Wow. I mean, thank you so much for, mentioning all of that. Right. But I got to go back with something that, that you said. 100 deals, underwritten in the submarkets of Silicon Valley. And then you did the same thing for LA. And obviously you must have done the same thing, if not more, for Texas. So, and the ratio is one deal, right? So you did almost, just over 300, deals to get this one off market deal that did pencil out. And the reason I'm mentioning this is for folks listening to our conversation is, you have to have the right mindset to start off. But then you have to have that grit, that discipline, the same discipline you had to do your homework the same day is what helped you underwrite 300 deals, right? And I think it's nice to mention that. So, this deal that you got, this off-market deal, what was the unit size, and what was the play? Was it a value add play? And can you just tell us a little bit more about, the story of this deal? I know it's still you're still in the life cycle of that deal. So can you just kind of walk us through the story, the value add, if it was, and how's the deal kind of performing right now?
Sure. So that acquisition was 261 units in Northwest Houston, and it was a pretty deep value add play where the previous buyer was a institutional buyer that had bought a large portfolio of foreclosed assets, and this was one of the 23 foreclosed assets. So they bought it for a song, I'm sure, put in just a little bit of money just to, get it a little bit running. And then they filled it up with low quality tenants. And then they, flipped it to a value add buyer that was willing to take it to the next level. So we got it for a discount because of, the deferred maintenance and the low occupancy. So we essentially bought the property at 70% occupancy with a business plan to push that to 93. And along the way, we would renovate interiors to get rent increases, as well as fix the deferred maintenance issues to obviously clean up the property and make it a nice, clean, safe place for the residents to live. So that was the business plan, and that capital expenditures budget was 1.8 million. So that's the amount of money that we needed to spend in order to get the property where we envisioned it to be in terms of renovated interiors, fixing up the siding, the concrete repairs, things like that, adding amenities such as a barbecue pit and spiffing up the pool area. So we have essentially spent our full budget and have come in under budget. So we still have maybe $500,000, $400,000 left of unspent dollars in our budget, which is great news for us and our investors, because that we can take that money and return that back to our investors. And yeah, it was a big deal for us, but we were ambitious to take it on because we knew that we had value there from underwriting so many deals and seeing, wow, this one really penciled so much better than the rest of the deals we had been looking at. And so, we had the conviction to say, yes, it's a bit bigger of a deal than we maybe feel comfortable with, but let's take it down. Let's make it work for us. And I think, once we fully turn the property around, our investors will be really happy.
Thank you so much for sharing that. So you mentioned really briefly about, dialing for dollars, right? And raising funds, right? So, 4.5 million raised, that's no child's play, right? I can imagine, what do you think were the kind of main things that you learned from raising funds, and, include some of the shockers that, that you got when you were trying to raise such a high amount?
Well, it's I think when people get started or they're in the business, they'll joke about how, there's some investors that they maybe see your email about and your pitch deck about the opportunity, and they'll invest maybe 250,000, 500,000. And on the flip side, you'll have an investor that, joins your webinar, wants to have a one-on-one phone call with you to hear more about the opportunity, then wants you to put together, customized stress tests and analyses. And then after all of this, and you jump through all their hoops, they invest $50,000. Or they'll ask you, can you lower your minimum? And I want to invest $25,000. So you never know who's going to, what investors are going to do what. But I think that lesson taught me is it doesn't matter, who the investor is or what their plans are. Especially being new and starting out, I was just willing to talk to everyone, answer all their questions. I would get emails with just, rows of questions, and I would just dissect that email one by one and answer each question and go and find that due diligence and go pull that information and ask the questions to make sure I was answering everything correctly. And I think that was an interesting, maybe, wow. And that's something unexpected. But other than that, I think, the big lesson is don't give up and keep, you never know where your break is going to come from. And some, a partner might join your team and be able to raise a lot more money than you thought they could, or maybe it's a lot less. And so never be complacent. Committed capital is not the same as funded capital, or whatever you want to call it, soft commitments. So we try to, we never stop raising money until all the money's in the bank. That's pretty much how we have to go.
Yep. I can totally relate with, a lot of the things that you've said, raising funds from, our investors here at DWELLYN. So, like you said as well, you just have to, continue doing what you're doing and providing value to those investors when they ask such questions or whatever it is that they need to know about the deal. So partnerships, you mentioned that. Kent, your partner at Lone Star, an amazing guy, legend as well. I speak to him all the time as well. And obviously, after you closed on your 261 unit, you also closed on the second deal in Houston. You're looking at a deal in Phoenix. You're constantly closing on deals, as many as you can in the year. So I don't want to go through every single deal that you've closed on, but you're getting towards 40 million in assets. You have a partner. What are your thoughts on partnerships in general, or how can someone get a good partner?
Yeah, that's I got very lucky being able to form my partnership and company with Kent. I would say the good way to find a partner would be to date for a while and try out a few different partners and figure out what you're really looking for and really have everything outlined. And that's just not what I did. Things just worked out very well with Kent and I. It was synergistic, bringing my skills and his skills and my inexperience and youth and his age and experience. And so things like that, really it came together. So I definitely not a partnership expert, but I would say those things to me seem like really important to date and just kind of try working on a few deals together, maybe underwrite some deals together, have feedback for each other. But at the end of the day, clear responsibilities, which are really difficult to have when you're starting out because it's kind of all hands on deck. Whether that be raising money, whether that be trying to find deals, talking to brokers, all hands on deck. So it makes it very difficult to have clearly delineated responsibilities. But the quicker you can get to that point in the business, in the relationship where there are clearly delineated responsibilities, I think that will promote growth and more efficiency. So that's what we're trying to work on now. And then from our
Okay.
roles, we hire and grow those efforts.
All right. Yeah. Thank you so much for that. Actually, I really like the fact that, you just mentioned that this was kind of like a click kind of partnership, because that happens sometimes. It doesn't have to be complicated. It could just happen to be, so thanks for sharing that. And we definitely dwelling into the quick rounds. These are going to be quick questions, quick answers. You ready, sir?
I'm ready.
All right. First question. What makes you, Rob, unique? What is that differentiating factor that separates you from the next guy and the next girl?
Perseverance and intellectual curiosity.
Awesome. What was the last book that you read, and what was the one thing that you picked up from that book?
Okay, so I just finished Managing the Market Cycle by Howard Marks. Everybody knows that's my favorite role model, Howard Marks. Go read his memos. He's been writing memos since 1990. My takeaways there's too many. He's an expert at not only what he does, but also writing about finance and the market cycle. So one takeaway there would just be, you can't time the market cycle. You can't say, oh, we're at a top, I'm going to sell. We're at a bottom, I'm going to buy. It's more of a question of how do you lean into the market cycle so it's in your favor. The idea is own more of things that are likely to do better over the near term or midterm, and own less of what's likely to do worse. But yeah, there's a lot more there.
Wow. Thank you so much for sharing that. Thank you so much. Last question. You've got Lone Star, you're looking at deals across the country, you're doing a lot of stuff, you're speaking, you're helping others. You're a busy man. What do you do for fun?
Oh, I have a lot of fun. So, right now I'm living in New York, so and it's summer, so like to go walking around Soho, shopping, hanging around there. I like to play golf, so I was just back home in California, got to play some golf with old friends. That was really amazing. And I love to read. I wish I could read more, but there's a lot of distractions out there. So, and then I also make sure I keep up my fitness. So work out in the morning and yoga.
Thank you so much for sharing that. Yeah, I really like that. I'm pretty balanced too. If there's a Dwell listener listening on our conversation and thinking, oh my goodness, I love this Rob guy. I want to get connected with Rob. I want to know him more. I want to reach out to him. What is the best place people can reach out to you, and how can people get connected with you?
So you can email me directly at rob@lonestarcapgroup.com. That address is the same as our website, lonestarcapgroup.com. On our website, you can read more about what we're up to, and also find our contact information from there.
Rob, it's been an absolute pleasure. Thank you so much. I learned a ton myself. I really appreciate you taking time out to talk to us here at the DWELLYN Show. I really appreciate you.
Thank you so much for having me. It's great.
Wow, that was Rob Beardsley. I mean, his story is just amazing. I mean, he's just crushing it. I mean, he's only 22 years old. They've got about 40 million on the assets. They are doing great. Kent, his partner as well. I mean, his story is just amazing. He's just so young and he's just crushing it. For anybody out there that is still kind of thinking, I don't know what to do. I don't know if I can do this. I mean, Rob is a perfect inspiration to kind of get you started, and just start right now. Don't wait. Just get started. I also want to say thank you so much for listening to the DWELLYN Show week in and week out. We've just passed, 100 episodes, or about 100 episodes now. So we're really pushing for reviews on iTunes. So if you can hear the sound of my voice, please go on iTunes and give us a 5-star review. I'll also have a link for you guys in the show notes. So please click on that link and give us a review on iTunes. You might not know this, but the more reviews we get, the better it is for the show and for other people to learn. So if you're learning from this show, you're learning about real estate, you're getting some wisdom, it's helping you, it's adding value to your life, please go on iTunes and give us a review. And also, drum roll, we're giving away Amazon gift cards for for reviews basically. So we'll put you in a draw. So if you go on iTunes, you give us a review, take a screenshot of that review and basically send an email to myself, ola@dwellyn.com. Send that to me, and obviously we can get your Amazon gift card to you if you win. Also, I just want to say thank you for all those that have actually given us a review right now. We just want to say thank you. We appreciate you. I think there's a few that we've got that came in recently. I'm going to read a couple of those reviews. I think there was one from someone called Nick. I think Nick is from York County in Pennsylvania. Said, from listening to your show and others, it has reaffirmed my dreams of owning multifamily rentals. I'm glad. At only 24 years old, I don't quite have the capital to purchase my first multifamily unit on my own, so I plan on using your wisdom to accomplish my goals as quickly as possible. I look forward to learning so much more from future shows, and I appreciate everything you do for young listeners. Nick, thank you so much. I really appreciate you. I'm sure you're a young future entrepreneur yourself. Of course, Nick, feel free to reach out to me if you need any help. I'm more than happy to get you on a call, a 30-minute call, just a free call to talk about real estate or anything you want to talk about, Nick. So reach out to me, Nick, or anybody out there actually, on my email, ola@dwellyn.com. I really appreciate you guys. One of my good friends in the real estate investing space, Rod Cliff, is going to be hosting another one of his live events in Baltimore. I think it's from September 27th to 29th. It's all about multifamily investing. So if you've never been, you have to be there. You got to go. And it's also going to be here in Baltimore, my home city. And if you want to get $100 off your ticket, that's a ton of discount right there. I have a discount code for you. Can you guess what it is? Of course, it's DWELLYN. So go to rodsbootcamp.com. So that's Rod, RODS, bootcamp, BOOTCAMP.com, and enter DWELLYN at checkout, and that will give you $100 off that event, and you get to meet me in person. I'm going to be there as well with Rod. So try to come out if you want to fly, or if you're close by and in this area. Make sure you be at that event. You're going to learn a ton. You're going to learn about multifamily investing and how to get started. I just want to say again, thank you for listening. Hope to see you on the next episode. Thanks.